Assalamualaikum warahmatullahi wabarakatuh. Welcome to the Islamic Capital Market learning video. And for today, I would like to discuss with you on the topic of Sukuk and Securitization. So the content outline for this presentation, we're going to discuss on the basic concept of securitization and bonds before we proceed to discussion on Sukuk. And then after that, we're going to discuss on two main important instruments with regards to the Sukuk investment. That is first on the asset-backed securitization and second on the asset-based securitization. For the introduction, in normal conventional market, security is a document representing receivable amount owed by the issuer in favor of the holder. Normally, the amount secured by a security are interest-bearing loan. And there are different kinds of securities such as bond issued by a company, by a government, debenture, certificate, as well as notes. Bond, which is one of debt instruments, are promissory notes that are traded in the market. And it can be categorized onto three features. First, according to the issuer. Second, according to tenor. And third, according to coupon type. The type of bond, according to issuer, can be divided onto government bond and corporate bond. For the long-term bond, it's known as government bond, and for short-term bond, it's known as treasury bills if it being issued by the government. If the bond are issued by the corporate, for long-term it is known as corporate bond, whereas for short-term bond will be known as commercial papers. Next, the type of bond according to the tenor. It can be divided onto two. First, callable bond, that is callable by issuer at a predetermined price before maturity. Investor is normally paid higher than straight bond. And convertible bond, allow holder to redeem at face value or convert it at predetermined numbers of stock. And the last one, the type of bond according to coupon type, it can be divided onto three. First, as a coupon bond, that is pay periodic interest based on coupon. Second, zero coupon bond, pay no interest on coupon payment, only pay at maturity at the face value, the purchaser will buy at discount. And the third one is interest that can be fixed or floating. Next, we discuss on securitization and Islamic securities, that known as Sukuk. Securitization is a process of transforming an otherwise illiquid asset into a liquid one. In more technical terms, securitization can be defined as the process of packaging financial promises and transforming them into a form whereby they can freely be transferred among a multitude of investors. The goals of securitization is to transform the promises of individual and corporation to make future payment into freely transferable securities that are appealing to investors. Prior to securitization, the raw asset, such as financial promises that create the financial right and obligation, are often in the form that may not be desirable to the investor, may be because of the size of the transaction or the portfolio risk that is involved. Through securitization and proper structuring, the transactions are restructured into forms that are more acceptable and attractive to investors in terms of cash flow and risk segmentation. The fund raised through the issuance of Sukuk or securitization should be applied to investment in specified asset rather than for general unspecified purposes. This implies that identifiable asset should provide the basis for Islamic bond. Since the Sukuk are based on the real underlying asset, income from the Sukuk must be related to the purpose for which the funding is used. The Sukuk certificate represents a proportionate ownership right over the asset in which the funds are being invested. The ownership rights are transferred for a fixed period ending with the maturity date of the Sukuk from the original owner, that is the originator, to the Sukuk holders. In the modern Islamic perspective, Sukuk lies in the concept of asset monetization, or also known as securitization, that is achieved through the process of issuance of Sukuk. Its great potential is in transforming an asset future cash flow into present cash flow. That Sukuk may be issued on existing as well as a specific asset that become available at the future date. In Islamic finance, there are three main concepts that can be rendered into the concept of Sukuk. First, the concept of tawriq, that means to render something into cash. It is about transforming a deferred debt for the period between the establishment of the debt and the maturity period into papers which can be traded in the secondary market. Second, tasnid, which means the transformation of illiquid debt into negotiable papers, that is sanadat. And the third one, that is called taskik, mean the process of dividing asset into papers, that is sukuk, or certificates. Securitization of asset into papers, securities, or certificate with the features of liquidity, tradability, and cash equivalence. Next, we move to the benefit of securitization. The benefit of securitization can be seen from three perspectives. This is for the originators, for the investors, as well as to the capital market industry. First, we look onto the benefit of securitization for the originators. First, transform relatively illiquid asset into liquid and tradable capital market instrument. Second, cheaper financing costs due to higher rating via credit enhancement. Third, allow diversification of financing sources. And fourth, facilitate removal of asset from the originator's balance sheet. Second, the benefit of securitization for the investors. First, it could provide a variety of product choices at attractive spread that attract a diversified investment profile. Second, it allows investment product to be tailored to meet specific investor need in terms of variety and flexibility of credit and maturity and payment, as well as the payment structures. And the last one, benefit of securitization for the capital market industry. The existence of secondary securitization market for benchmark purposes, facilitate and encourage efficient allocation of capital, and third, reduce risk within the banking system. Next, we move to the discussion on the concept of sukuk. Sukuk is a plural form and sak is singular form, which mean legal instrument, deed, and check. It can be referred or may be referred to any certificate representing a contract or conveyance of financial right, obligation, or money transaction that is Shariah compliant. According to Islamic Jurisprudence Council, sukuk can be defined as any combination of asset or the usufruct, that is manfaat of the asset, can be represented in the form of written financial instrument which can be sold at a market price provided that the composition of the group of asset represented by the sukuk consists of majority of tangible asset. According to IFI, the Accounting and Auditing Organization for Islamic Financial Institution, investment sukuk are certificate of equal value representing undivided shares of ownership of tangible asset, usufruct or services in the ownership of the asset of particular project or special investment activity. So, from the given definition, we need to further know what is sukuk is all about. Sukuk or sak is believed to be source of fruit in the European check, the modern type of check. The origin of sukuk can be traced to the Middle Age, whereby sukuk were largely used by Muslims as papers representing financial obligation originating from traders and other commercial activities. Sukuk referred to an Islamic investment certificate which allow investors to have right of ownership of the asset, including the cash flow and risk associated with such ownership. Sukuk offers risk diversification for investors for their portfolio, and sukuk are asset-backed, tradable, and Sharia-compatible trust certificate. The sukuk can be further divided onto three types or three categories. That is, first, the senior unsecured sukuk, also known as asset-based sukuk. Second, subordinated sukuk, and the last one, secured sukuk or asset-backed sukuk. We're going to discuss these three types of sukuk in depth. The first type of sukuk, that is senior unsecured sukuk. The bulk of the sukuk issued and traded in the market today, whether it is sukuk ijarah, wakalah, salam or istithmar, sukuk murabahah and others, are all senior unsecured sukuk. A senior unsecured sukuk entitles the sukuk holder to claim against the issuer only and does not give them any security interest or collateral right over any asset of the issuer, including the asset underlying the sukuk. Given the sukuk being issued and traded in the fixed income capital market along with conventional bond, the majority of sukuk have been structured from a legal and economic perspective as senior unsecured instrument, which entitles sukuk holders to have legal recourse only to the issuer as senior creditor and not the underlying sukuk asset. Next, we move to the second type of sukuk, that is subordinated sukuk. In selective instance, a few sukuk issuance have been structured from legal and economic aspects such subordinated instruments. Sukuk under this categorization can be of any form, including sukuk ijarah, wakalah, mudarabah, or even musyarakah. This means that the issuer of subordinated sukuk will have first to honor all payment obligation that it owes to secured creditor, such as the holder of secured sukuk, other senior ranking creditors, tax authority, and senior unsecured sukuk holder before honoring payment obligation to subordinated sukuk holders. Usually, a subordination structure is required by certain issuers who are looking for meet certain debt or certain capital or debt ratio requirement. In a subordinated sukuk, the sukuk holder will have two options. That first, the sukuk holder will have legal recourse only to the issuer but subordinated to all senior creditors, and second, the sukuk holders don't have any recourse to the underlying sukuk asset. And the last one is the secured sukuk and asset-backed sukuk. In a very few instances, some corporates have also issued secured sukuk and asset-backed sukuk. Usually, issuers opted for this structure if they require an off-balance sheet financing and or they are not able to obtain a good credit rating without giving sukuk holder recourse to the underlying asset as collateral. The main differences between the senior unsecured and sukuk secured sukuk secured, like project finance sukuk and covered sukuk, are the senior unsecured sukuk holders will only have recourse to the issuer but not to the underlying sukuk asset, and second, the senior secured sukuk holder will have recourse to both the issuer in most cases as well as the underlying sukuk asset in all cases. In asset-backed sukuk structure, the ABS holder will only have recourse to the underlying sukuk asset. Again, the type of sukuk under this categorization can be of any form, including sukuk ijarah, wakalah, or sukuk salam. So from the three categories of sukuk that we have discussed previously, next we move to the what make asset-backed sukuk different with asset-based sukuk. First, in terms of the features, for the asset-based sukuk, it is using Shariah-compliant asset and business venture to facilitate the issuance of sukuk. For the asset-backed sukuk, the asset backing Shariah-compliant asset or business venture which form primary sources of income and in return as a return for the investor. It will be issued in various Shariah principles. Second, in terms of key accounting concept or treatment, for the asset-based sukuk, it should be on balance sheet for originator of the obligor, and for the asset-backed sukuk, it is off balance sheet for the originator. We can see here that the true sale criterion, legal and off-balance sheet accounting. Third, in terms of funding costs, for the asset-based sukuk, It is market-driven, mainly depending on originator or issuer credit rating or standing. Whereas for the asset-backed sukuk, it's mainly based on the strength of the asset cash flow. And the last one, in terms of rating of sukuk, for the asset-based sukuk, corporate rating of the issuer or the obligor, and for the asset-backed sukuk, it is according to the strength of cash flow. Next, we move to the reason for issuing sukuk. There are several reasons, such as first, there are growing demand from investors to place their fund in accordance with Shariah compliant principles. Second, government or corporate are able to raise funds for their working capital or project financing for infrastructure and development projects under Shariah compliant framework instead of debentures or loan with high interest rate. Third, the fund collected also serve the purpose of liquidity management for financial institutions and individuals undertaking Sharia compliant business because it comply with the internal monetary and regulatory policies. Fourth, to facilitate the development of the local, regional, and global sukuk market and to tap into a wider investor base. And the last one is sukuk are meant for the equitable distribution of wealth, as it allows all investors to share return from the true profit generated from the asset. Next, we move to what makes sukuk different from bond. First, we look onto the first features, that is on the underlying asset. As for the sukuk, sukuk are financial certificate representing beneficial ownership of real asset. It gives the investor proportional beneficial ownership in the asset on which the sukuk are based. Whereas for bond are proof of debt and not a share of ownership in the asset. It is a debt obligation from the issuer to the bondholders. Second, we look onto the issuer representation. For the sukuk, the asset on which sukuk are based must be tangible and in compliance with the Sharia and Islamic principles. Whereas for bonds are issued to finance almost any purpose that comply with local regulatory legislation. Third, we look onto the issue unit. For the sukuk, the issuer is not a borrower, but it can be either a buyer in a sale contract, a lessee in a lease contract, or a partner in partnership contract, depending on what type of akad or contract that be utilized. For bond are debt, whereby issuer are the borrower from the investor, that is called as bondholders. Second, each sukuk represents a share of the underlying asset, whereas for bond, each bond represents a share of debt. Third, the face value of sukuk is based on the market value of the underlying asset, whereas for bond, the face value of bond price is based on the issuer creditworthiness, including its rating. Next, in terms of return sharing, return are termed as dividend and will depend on the underlying Sharia contract use. Sukuk holder receive a share of profit from the underlying asset and accept a share of any loss incurred. The amount of profit cannot be ascertained. It could be fixed or vary, as it based on the sharing of profit and loss. For the bond, return are termed as coupon. Bondholders' return can be ascertained and they receive regularly scheduled and often fixed rate interest payment for the life of the bond regardless of issuer's loss or gain. And the last one, in terms of capital guarantee, the capital is not guaranteed for sukuk holders. Upon maturity, sukuk is valued based on the market value, a pre-arranged figure which agreed upon by two parties, or a fair value. For the bond principal amount is guaranteed upon and payable upon maturity date. Next, we move to the sukuk payment structures. The payment on the sukuk are structured into two forms. First, amortizing securities or amortizing sukuk, and second, non-amortizing securities or non-amortizing sukuk. For the amortizing securities or amortizing sukuk, The payment representing the amortizing of invested capital together with the profit, be it fixed or floating, derived from the investment. For the non-amortizing securities or Sukuk, the payment of the derived profit, either it's fixed or floating, are made periodically during the tenure of the Sukuk, while the payment that represents the invested sum is scheduled at the end of period, that is, at the final maturity date of the Sukuk. However, there have been innovations whereby the redemption to the Sukuk are in the form of exchangeables such as equity or commodities. In the case of exchangeable with equity, the periodic payment to the Sukuk could be in the form of dividend income stream paid to the equity. Next, the tradability of Sukuk. The Sukuk can be classified further into tradable and non-tradable. It is based on the underlying tangible asset or proportionate of ownership of a business or investment portfolio. Tradable Sukuk are very essential for Islamic financial institutions to enable them to manage their short-term liquidity requirement. According to IFI's Shariah Standard 17 on investment Sukuk, Sukuk to be tradable must be owned by Sukuk holders, with all right and obligation of ownership in real asset, whether tangible, usufruct or services, capable of being owned and sold legally as well as in accordance with the Sharia rules. The manager issuing Sukuk must certify the transfer of ownership of such asset in its book and must not keep them in as his own asset. According to AUFI Sharia Standard 21 on financial papers, Sukuk to be tradable must not represent receivable or debt, except in the case of a trading or financial entity selling all its assets or a portfolio with a standing financial obligation in which some debt incidental to physical asset or usufruct were included unintentionally in accordance with the guideline mentioned in. As per the IFE Sukuk based on Ijarah, Istisna, Mudarabah or Musyarakah principle are tradable, non-tradable Sukuk represent receivable of cash or goods, for example Sukuk of Salam or Murabah or are non-tradable Sukuk. In Malaysia, as per the resolution of the Sharia Advisory Council of the Securities Commission, buy or dine is permissible and it must be made in cash. This resolution recognized buy or dine or debt trading as one of the acceptable principles of Sukuk issuance. Sharia compliant receivable arising from the contract such as Murabah, buy bithaman ajil, Ijarah or Istithna are converted into tradable debt instrument. These enable tradability of debt and equity-based Sukuk in the secondary market in accordance with Sharia principles. Next, we move to the development of Sukuk structure. From Sharia perspective, Islamic financing should only be raised for trading in specified and identified Sharia-compliant asset. That is, the issuance of Sukuk must be supported by an underlying asset. In general, trading of indebtedness is prohibited unless it is traded at par. And according to Middle Eastern and some other jurisdictions, they only allow debt trading at par, whereas for us in Malaysia, trading of indebtedness is permissible at any value provided the underlying contract is Sharia contract, that is buy bisaman ajil or buy undain. Next, we move to factors for considering a Sukuk issuance. There are several factors that we will discuss in depth, such as first, economic size, second, income per capita, third, Muslim population, fourth, size of Islamic banking, and last one, institutions. First, the economic size. When the size of the economy is small, there will be no incentive to issue Sukuk in the local market, because it will not attract multinational corporation and foreign investor. Small markets tend to be too volatile, and this is unattractive for international investors. Second, Muslim population. The higher the percentage of Muslim in a country, the higher the demand for the Sharia-compliant securities, and hence the faster the development of Sukuk market due to the demand of the market. The third one, size of Islamic banking. Islamic banks serve as the dealers and market makers in the Sukuk market and can be considered as the major investors in Sukuk certificate, which are structured to comply with Islamic investment principles. Measurement of the size of Islamic banking in the country with the ratio of Islamic banking asset to the country total banking asset. And the last one, institution. Develop institution of governance matters for financial and economic development because they shape the structure of economic incentive in society, facilitate investment in physical and human capital, and contribute to the efficient allocation of resources in the economy. The income per capita. Higher level of income per capita should result in higher demand for financing activities and hence higher need for Sukuk securities. Moreover, less developed countries are often characterized by weak creditor right, inadequate corporate governance, poor transparency, and volatile investment environment. Next, we move to the subtopic definition of asset according to Sharia. There are several terms that should be followed for us to define what type of asset that should comply to the principle of Sharia. First, the assets must exist physically, such as land, building, or machinery. Second, the asset must be pure. The third one is the asset must have use, however, restricted to halal use and not, for example, for operation of casino or alcohol sale outlet. Fourth, the asset must be owned by the seller. Fifth, the asset must be free from encumbrances. And the last one, the asset must be known by specification, description, location, and etc. Next, Sukuk must comply to the underlying Sharia principles. Fund raised must be used for Sharia compliant activities. Fund raised may be used to finance needed tangible asset. Specificity of asset is important since Sukuk, unlike the conventional bond, cannot be used for general financial needs of the issuer. Income received by Sukuk holders must be derived from the cash flow generated by the underlying asset. Sukuk holders have the right to the ownership of the underlying asset and its cash flow. Clear and transparent specification of right and obligation of all parties to the transaction, in particular the originator and Sukuk holders, and there is no fixity in return. Sharia contract underlying Sukuk. Sukuk can be structured in different ways depending on the underlying contract. A Sukuk can be structured based on any of a combination of two or more of the Islamic contract of transaction, such as the contract of participation, such as Uqud al-Ishtirak, of Mudarabah and Musyarakah, or the contract of exchange, that is Uqud al-Muawadat, such as Bai' Bithaman Ajil, Murabahah, Salam Istisna, and Al-Ijarah. The application of this contract of transaction result in the Sukuk backed and secured by asset and thus having inbuilt security for the investment. The use of SPVs. SPV or special purpose vehicles can be created through a variety of entities such as trust, corporation, limited partnership, or limited liability corporation. In some cases, it may be desirable to remove asset and their corresponding liability from the balance sheet of the company, and a sale of the asset to the SPV will accomplish this. The SPV usually is created so that it is bankruptcy remote, which means that the assets sold to the SPV are not in risk if the SPV or the company whose assets are being securitized become insolvent. SPV is normally established based on the common law distinction between legal and equitable right or ownership. SPV is considered to assume legal ownership right as recognized by court of law of the underlying asset used in sukuk or securitization for the benefit of beneficiary, whose interest or right is recognized by the court of equity. A split is thereby caused to the concept of ownership, as a result of which the beneficiary is not empowered to take or assume all right as an established owner of the asset, as is required by Shariah law. If he is truly to be considered as true owner as per the Shariah provision that will give him several rights that include right of free disposal and possession without restriction. There are several characteristics of SPV, such as: first, on bankruptcy remoteness; second, is very thinly capitalized; third, it's formed for specific purposes, no other activities taken; and last one, do not add to the cost of transaction, capital, or tax efficient. And next, we move to the rating of Sukuk. The rating of Sukuk represents the evaluation of default risk of the issuer of Sukuk. This is usually done by special companies called as credit rating agency or CRAs. The role of CRAs is very crucial as they measure the creditworthiness and probability of default of the issuer or Sukuk. Their role is to provide an independent and reliable opinion regarding the risk inherent in Sukuk. The main factor of the rating of Sukuk: first, the identification and assessment of the risk involved and their mitigating criteria. Second, measuring the correlation of the Sukuk with the risk factor. And the last one, testing against a set of benchmarks where it is available. Some famous CRAs for Sukuk rating are Moody's, Standard & Poor's, S&P, Fitch. Together they form the Big Three group covering almost 95% of rating industry. The MARC, Malaysian Rating Company, and the Rating Agency of Malaysia, RM Rating Service Berhad. The issue and challenges in the Sukuk market. There are several issues faced by the Sukuk industry. First, the global economic condition. World economic play a vital role as catalyst in the Sukuk market. Deterioration of world economic will influence greatly on the primary and secondary Sukuk market. Even though Islamic systems have some distinction features from conventional, yet the reality on the ground proves that any movement in the conventional market will have an impact on the Islamic financial market. Second, lack of standardization and IFE statement. Lack of consensus among scholars has led to lack of uniformity of Sukuk and thus exposed to lots of issues regarding the permissibility of Sukuk. These concerns have addressed by the IFE by issuing relevant statements since 2008. Since then, players have tried to adopt the concept and principle of the statement in dealing with Sukuk. Third, default Sukuk. Theoretically speaking, Sukuk is more secure than conventional bond as they were backed with real asset. However, recently there are cases of Sukuk default which have left investors nervous as to whether they have a claim over the Sukuk underlying the issuance or not. This is happened due to majority of Sukuk in the market are asset-based as opposed to asset-backed. Essentially, while from Shariah perspective, Sukuk certificate represent an underlying ownership interest in an asset, the commercial and economic reality is that most Sukuk that are issued are unsecured and equivalent to conventional bond, such as corporate credit risk instrument. So that's all for this chapter. And in this chapter, we have learned about the concept of securitization, the concept of bond and Sukuk, asset-backed securitization, and asset-based securitization. That's all. Thank you.